The Legislature today approved a 20 NT increase to a pack of cigarettes as a means of bringing in an extra 18.3 billion Taiwan dollars every year for the government's long-term care plan for the elderly. In contrast to the Premier's earlier comments, Finance Minister Sheu Yu-jer played down the possibility of using an across-the-board sales tax hike that could affect a much broader range of consumer goods.
To fund the nation's long-term care system, the tax on cigarettes is set to go up by 20 NT dollars per pack. Finance Minister Sheu Yu-jer attempted to assure lawmakers over concerns that the tax hike could exacerbate smuggling of counterfeit tobacco products and lead to sellers hoarding old cigarettes.
Cigarettes taste best within about 6 months, after which they start to taste a bit different. Also, the packaging is different for newer cigarettes.
The Finance Ministry estimates that with 3.13 million smokers in Taiwan, raising the cigarette tax could bring an additional 18.3 billion NT dollars per year in funding for the Long-Term Care Act. As for Premier Lin Chuan's previous proposal of raising the sales tax to pay for the plan, Minister Sheu had this to say.
For now, raising the gift tax and the cigarette tax should be enough to fund the plan for around 5 years, according to an estimate by the Health and Welfare Ministry. Over the long term, the Cabinet or the Health and Welfare Ministry will consider whether to use money from the National Health Insurance System or tax revenues to fund the plan after those 5 years.
Aside from the cigarette tax hike, the gift tax will also be restructured from the current single rate of 10% to a progressive rate of between 10 and 20%. That adjustment is expected to bring in another 6.3 billion NT dollars per year for the long-term care system.